Hello, Alex from DiamondArm. First off, read this disclaimer carefully. This ETF right here gives you exposure to one of those industries we absolutely need. Food and Beverage ETF. PBJ is the ticker. We can find it under the sector Consumer Staples. You can see here, the average performance here from the consumer staples from the low vis-a-vis the S&P 500, so there is some underperformance. And also some underperformance vis-a-vis the 52-week highs. Okay, so let's first look at the seasonality. So this is the percentage of months in which PBJ closed higher than it opened between 2005 and 2020. We are currently in the later part of August. We are heading towards September. You can see that there usually is a tiny loss in September, but the seasonality improves into the later part of the year. But the super strong period is quite clearly here. February, March, and April, that's like the super period for PBJ. Let's look at it against the S&P 500, the SPY. Okay, let's get a bunch of years. Yeah, October is usually a month of outperformance. Then again, February and March are the strongest. Okay, so let's now look at the charts. This is all the data we have, weekly data points. Something that is rather interesting with PBJ is that it's been in this massive consolidation range, upper end here, lower end around here, and it's been chopping around here for years. This is a massive range, and the longer we go sideways, the bigger the breakout. We did have a breakdown here, but along with many other ETFs, this one has seen a massive Fed liquidity fueled rally. It is still some distance away from new all-time highs. Let's actually measure. So we need to really break out to a new all-time high. It would be 4.4-ish% from the current levels. It is doable. If you look here at the RSI, you can see that we have never been overbought here on the weekly RSI. Here we almost got overbought, and then we have a very sharp sell-off. You can see here that RSI currently is some distance away from the highs. The first time we got really oversold was actually here. So that's the RSI history. Looking at moving averages, we have been above the 5-week moving average here in blue, light blue, for quite a few months in a row. If you look at the history of this ETF, quite clearly it usually has these cycles with pullbacks. So that's the psychology of the ETF. That's something that's quite interesting and important to look at when you have this very protracted period of a one-sided direction to the market. That is not the usual history here, as you can quite clearly see. So that strengthens the case that maybe we are due for a reversion to the mean, which would mean a pullback. There's a 46% positive correlation with the S&P 500. Let's look at the daily data points here. You can see that the accumulation distribution line, it was actually in decline for some time. It's actually back here is when we had, let's even go further back, okay. So you can see that the AD line is higher here, and then it's been deteriorating for some time. That's interesting. So there's been some fatigue. That can be explained with the long consolidation. Because when you go sideways for such a long time, there can simply be buyer fatigue. People just want to move out and get into something that is actually on a clearly defined trend. Because moving up and down, that can be annoying. Looking at the moving averages here on the dailies, you can see that there is a strong rally. There's been a bit of a pullback here. Then again, you do see the history before the recent volatility explosion. You can see that there were these very frequent cycles. Yeah, very often we were touching the longer term moving averages, like the 100 and the 200-day moving average, in blue and red here. We are very far away from those moving averages. well, we are some distance away. Hence those are some of the more natural pullback levels. Maybe, you know, the 50-day moving average. If we were to go down to the 50-day moving average in green, that would be approximately a 5% pullback. Looking at the RSI here, we do see this phenomena where we do not really like to be oversold or overbought. Given that we are pushing ourselves a bit here into overbought territory, and historically we don't like that, well, the traders don't like it, then that is also something that could trigger that pullback. Okay, well, let's explore a bit further. So here you can see that there are no options available, and it is not actually shortable. That's unfortunate. Hence, this is one of those where you have to be long, though there are underlying stocks that are more liquid. Here you can see the performance year to date, 0.38%. Not that exciting. Here's the average volume, you know, around 16-ish thousand shares. Okay, let's look at Saks.com. They do have a number for sell on this ETF. That hasn't triggered a sell-off yet, but Saks is a bit of a substantial authority in the financial landscape. Let's explore the ETF a bit further. The expense ratio is on the higher end for this kind of an ETF, 0.63%. If you look at the valuation, let's look at so the current PE is 18-ish for PBJ. RHS, that's equal weight consumer staples, so that, as you can see, 16, which is lower but not like super low. The very high 24 PE, above 24, that's from the Vanguard consumer staples ETF. Looking at the dividend, PBJ has the worst dividend here, 1.21%, so you are not holding this one for the dividend. The XLP, which is the classic consumer staples spider ETF, much better dividend, 2.5%. Let's first look a bit at the fund flows, the last 6 months. There's certainly been a pickup here in volume. Look over, 5 years here, you can see that there's been a lot of red actually. You can see that the volume has really just been, a lot of volume here, and then it's really been drying up. Let's look at holdings. So here we have some restaurant companies, Chipotle. We also got Kraft Heinz here, their famous ketchup and other condiments, Mondelez, Hershey's, General Mills, PepsiCo. And many of these stocks are very liquid. Hence, if you do want, given that there is some risk of pullback in this space, some of these stocks could be the candidates for that trade. Okay, so to sum up my take on this ETF, the benefit with food and beverage is that these are products that you just need. These businesses are not going away. Hence, if consumer trends change, this ETF will be able to just reflect that. We will always be eating and drinking. When it came to the charts here, we could quite clearly see that for the bigger picture, there usually are pullbacks. It likes to revisit some of the longer-term moving averages. Given that we have seen a very massive move, it doesn't make a whole lot of sense to now be like, oh, I'm going to put on a big bullish position. While we could visit new all-time highs, there weren't that many percentages away from that. Hence, the probability of a pullback is a bit higher, I think, than the opposite, given literally all of the history we have right here in front of us. And you also have some seasonality here, suggesting that we could have some pullback around the corner, and then we could have some stronger seasonality later in the year. Whatever you do, of course, don't fight the trend, and may the trend be with you.